Welcome to Conversations, a weekly audiocast featuring interviews with leading investment strategists and recognized financial professionals. Brought to you by the Market Technicians Association.
Welcome to Conversations, the official MTA podcast. My name is Spiroglou, and today I'm joined by Larry Berman. Larry will be presenting to the at the UK chapter of the MTA. The topic of the presentation will be understanding how your cognitive biases affect your investment decisions. Both the presentation and the interview have been videoed and will be available to watch at the MTA website, along with the archives of all the UK chapter monthly meeting presentations and presenter interview videos. Without further delay, let's talk to Larry. Larry, welcome to the show.
Thanks.
Right, let's begin with the first question. Could you please give us a bit of information about your personal and educational background before getting involved with technical analysis?
Well, it's interesting. I had a job just out of school as a financial planner selling mutual funds. And one of the guys that worked at the firm used to be a floor trader in Chicago. And he said to me, doesn't matter what the analysts write on the papers, it matters what people do with their money. And that statement sticks to me today because it's true. I mean, if people react, then it moves markets, but you could read it and kind of throw it away. And so reading analyst reports and things like that may or may not help you. It's watching the tape, understand the price movement, and that was the kickstart of my career in technical analysis.
I understand. So that which also answers my second question on how you first got involved with technical analysis. So how did you proceed from that single statement to coming where you are today?
Right. Well, so it's a long path. I mean, one of the big parts of the transition, being in Canada, I joined the local technical society. And they were looking for a young guy to be eager and do a lot of work, so I ended up writing a newsletter, which is like this task for you is, takes a bit of time every month. So you kind of go through it, and you did. And every time an important market person came to town, I would interview them, and I got to know people and got involved. And at the time, I started doing my CMT course. And the MTA had a internship program where you got to spend time with some of the top people on Wall Street. So I applied for that, being still relatively young in the business, and that changed my career. I mean, I wouldn't be where I am today in my career without the MTA. It's been fantastic for networking and learning.
Could you please describe your day-to-day responsibilities and the most challenging aspect of your job today?
The market volatility is tough. I spent the first 17, 18 years of my career in sales and research, and the last 6 or so as a portfolio manager. And it's very, very different selling research and being a technical analyst than running money. It's night and day, in fact, because when you're at that trend line, when you're at that moving average, you've got to make that decision. Do I buy or sell right now? Is it going to break? Isn't it going to break? And ultimately that's the test, because technical analysis is an alternative to buy and hold. Buy and hold, you're the index and you take the market returns and you do nothing about it, or maybe you tweak things here and there. But as a technical analyst, you're managing risk. You're being active, and if you stop out and the markets turn and you get whipsawed and they go higher and you have to chase, you're underperforming. So it's how much you buy and when you buy that's the decision. And some days it's hard, especially when the markets are really volatile. They say volatile markets are good for traders. I don't enjoy them, not at all. When things are really choppy, it's hard to get the tape right. That's for sure.
Which brings me to my next question, called the section is the toolbox. Could you please talk about your favorite tools and techniques as a technician, and what do you specialize in?
So over my career, I've attended conferences and seminars and speeches like the one I'm giving here, and I took a little piece of what each person said that fit to what I was able to understand. And so a couple of things. I always liked the idea of buying low and selling high. That was something that seemed natural for me. So I look at things like Bollinger Bands and those kind of range trading tools to help me navigate. Something like an RSI to determine how overbought or oversold we might be in a trading range. I look at multiple time frames, so I first like to look at weekly charts to confirm how oversold we are in a longer term horizon compared to a daily chart, for example. A gentleman by the name of Ian Notley, who's passed away, but all people in the MTA would know of Ian's work, and he broke the market into cycles. It was either in an advancing stage of distribution, accumulation, or basing, and he had these 4 cycles. And when I combine that with some of the work of J.M. Hurst, some of the work of John Bollinger, I came up with the idea of trading bands and trading cycles, and I developed my own set of tools. And so, I like RSI, I like MACD, but none of them kind of were perfect. So I developed my own set of tools for how I need to manage and invest for clients.
During your answer, you mentioned some very interesting names, especially Ian and John Bollinger. Who would you say as your greater influences and to form your own methodology, and who would be your 3 top technical analysis books to recommend for someone beginning with technical analysis?
One of my favorite books still is Alexander Elder's Trading for a Living, because what he did in the book was he took the indicator and he explained to you what market environments it works and then when it doesn't work, and very early in my career I had a curiosity for how things work, so I took an RSI and I took it apart. It's like opening a car engine and seeing how it works under the hood. So a lot of the indicators that I understand what markets they work in, what they don't work in, when divergences can give you misleading indicators when they don't. So that part of the thing, the technical process was very key early in my career. So Alex's book was interesting. Understanding the mass mood of the market. Jesse Livermore's Reminiscence of a Stock Operator, those kind of books. Reading how people like Market Wizards books from Jack Schwager in the early 90s. And to the very basics of TA, going back to what Schaubacher was writing in the 20s and 30s that Edwards and McGee then picked up on, etc. Basic understanding of what a trend is. It's higher highs and higher lows, and when the market stops making higher highs and starts making lower lows, listen, you can call it an Elliott wave pattern or whatever. It's a message. The traders are telling us something, the mass psychology of the market. So trying to interpret the tape patterns for me is very important.
Okay, let's talk about technical analysis or market principles rather. If you could distill your market knowledge in a few axioms, for example, don't fight the tape, which ones would these be?
The simplest thing is the market's smarter than I am. Manage risk, manage risk. Those are 1, 2, and 3. Nothing else is important. Like if you fall in love with an indicator, listen, indicators work 51% of the time. And if you're good at them, maybe 55. There's no indicators that are right all the time. Doesn't matter what they are, doesn't matter who invented them. They all work sometimes and not in others, because some are designed to capture range-bound markets, some are designed for trend following, and we don't know without the benefit of hindsight when we go from oscillating to trending. We do know that markets oscillate most of the time and trend a small period of the time. But when that current move is that a breakout or is it not a breakout? You just never know. So manage risk is the most important thing, and developing tools to affect that is what's helped me over the years.
Okay, going back to what Larry does, can you give us a quick word about your involvement with the MTA?
Well, again, it started out as, I want to learn. The MTA internship that I did in 1994 on Wall Street was fantastic. It really kick-started my career as a professional technical analyst. I got a number of job offers after that. My wife and I moved from Toronto to Boston for a couple of years. For a couple of personal reasons, we ended up moving back to Canada, but putting the CMT on my resume really helped me distinguish what I would do, also being a fundamental analyst, the CFA, to really demonstrating that I understood how markets work. And anybody who's been in the business knows that, listen, you could be an MBA, you can have all kinds of degrees that puts you, on the table for a job. But understanding how the markets work, that's where you make your bonus every year. So the CMT helps you with that. And for young kids getting into the markets, then they asked me, I said, listen, if you want to impress your boss and get the interview, you got to do a CFA. You got to have that. It's required. You got to have an MBA from a good school with good marks. But if you have a CMT, you're going to be better at your job and understanding the markets and evaluating investment decisions.
Okay, our last question, fun fact. What does Larry do to relax outside of market hours? Do you have any hobbies?
Golf.
Golf.
Yeah, golf. Golf as much as I possibly can golf. That's my, I'm not very religious, so to speak, but that's my temple.
Brilliant, thank you. Okay, and that wraps up today's MTA interview with Larry Berman. We would like to thank you, Larry, for presenting our chapter. And for the MTA, I'm Alex Spiroglou, and that's a wrap.